So, welcome back to Forex Pros. Today, we will be discussing what kind of trading opportunities can we find on gold. So, first of all, my mouse is not working that much right, so we might see a bit fluctuation or lagging in the analysis. But still, I will be able to analyze the market and tell you guys what kind of trading opportunities should we be looking for and what can we expect from the market. So first of all, as we start from the monthly time frame, and what we can see is that the market is currently at a very strong structure support. And why is this a very strong structure support? Because the higher the time frame, the support or resistance is more effective. And as you can see from the previous time frames, the market tested this support at this point and it went a huge way towards the upside. Again, the same response from this point, same response from this point, and again the market is testing this point, so we can expect the market to continue its movement towards the upside. So this is the first thing. The second thing, I'm just talking about the basic things right now before going down to the analysis. As you can see, the more the market tests the support, the more weak it gets. So as you can see, this is approximately the third. If you consider this, it will be the fourth time the market is testing the structure support. So there is a possibility that the market may break down. But as we know that this cannot be a confirmed analysis, just the basis of on that the market is testing the support multiple times, so it should break. Now we will break down our analysis to multiple things. So first of all, what I think, whenever you want to measure an impulse and a correction, you take the Fibonacci from the top to the bottom, and what you can see is that we have a strict 0.382 retracement level at 1834, and Fibonacci retracement. If we follow that, we also see that if even if the market is planning to break the structure support, this is the first shoulder, this is the head, and the market might come up to make the second shoulder before breaking this support. So on the monthly time frame, if this candle closes bullish, there is a possibility that there is 80% probability that the market will be going towards the 1834 level. But we cannot say for sure right now because still there are 19 days before the monthly candle closes. Now, moving down to the weekly time frame, what we can say is that in my past analysis, I told you guys that after making this M pattern, we will be expecting a retracement to the bottom neckline. So this is exactly what the market did, and market has been moving down in impulses and correction. Market made this M pattern and made a retracement to the bottom neckline, and again, and another thing which you need to consider is that when the uh, sorry, yes, like I told you, I have some problems. Yes, when the market makes an M pattern, then we can expect a retracement to the bottom neckline. But there is another kind of M pattern with an overextended arm. When the market makes an M pattern with the overextended arm, then we expect the retracement to the first arm of the M. And this is exactly the two scenarios. You can see this is the M pattern and the retracement was to the bottom neckline. Second was an extended arm. So the market made the retracement to the first arm and now it's going down. Similarly, the weekly candle closed bullish, but as you can see that the candle was not having much bullish pressure, which means that there is a possibility then when the market starts, the market might come down. And also there is a possibility because we are reactive in the market, not predictive. Predictive is that we're expecting that the market might go up. So as soon as the market opens, we will go for a bullish trade. But what we will do, we will wait for the confirmations. And if the market starts to move bullish, while in the bullish movement, we will take our entry and get out. That's the reactive. And the prediction would be like, I'm expecting the market to go up. So as soon as the market opens, I will not be waiting for the market to start the bullish movement and try to take the trade. It's risky, but like in the long term, when you're trying to grow your accounts or make successful trades, I recommend that you start being reactive, not predictive. Moving down to the daily time frame, what we can see, this is an important thing, important structure on the daily time frame, and I'll tell you exactly why. Just a moment. Yes. So first of all, What do we have on the weekly time, daily time frame? As we can see, market made this impulse, then a correction, and again an impulse, and this may be a correction. But what you can see is that the market is just a moment, sorry. Yes, the market is basically struggling in this zone. So the market is basically kind of consolidating, and I told you multiple times, when the market starts consolidating, and if you're expecting a downward movement, there is a possibility that before the downward movement, market will make a fake breakout to the upside and then continue its movement towards the downside. Similarly, if you're expecting the market to go towards the upside, the market will make a fake breakdown to the downside to kick out the retail traders and then continue its movement towards the upside. Now, if we break this daily time frame, first of all, if the market makes the upward breakout, and as soon as the market again enters the 0.7 1717 and 1707 level, we will be sure that the market is coming down. So similarly, if the market goes towards the downside and we see that the market has broken below the 1707 level, then we'll be expecting the market to come back up. So this is just the basic knowledge which I'm giving you out. So how will we capture this consolidation zone? So first of all, you can see for these two candles, the market has been struggling to break above or below this structure. So on the 4 hour time frame, it will be much clear because of this zone. And what we can see is that the market is basically stuck in between these two zones. It's making fake breakouts towards the downside, towards the upside, but that's on the 4 hour time frame. We're expecting the fake breakout on the D1 daily time frame. So it will be a huge breakout. So first of all, what we can see is that, like I told you, the market made this fake breakout on the 4 hour time frame, and after the market has again entered this zone and now making a retest. So at this retest, what I'm expecting is that the market might come down to 1707 level. So that is a trade of 100 pips, which I recommend you guys to place your stop loss 50, 60 pips, and as soon as the market opens, go for it. There is a possibility that the market might hit stop loss. Sometimes when I tell a trade like this, people start coming to me and they say that our stop loss got hit, your analysis is wrong. I'm doing my analysis, I'm not telling you the future. So whenever I'm analyzing the market and I'm staying put a stop loss of 50 to 60 pips, the point of putting the stop loss is that there is always a possibility that our analysis can go wrong. So the most successful traders have a success rate of 60 and maximum 70% per annum. That is, in 365 days, out of 1000 trades, the 400 trades go wrong. So you can't expect me to tell you the future. So first of all, as soon as the market opens, we can expect that the market might come down to 1707 level, and I'll be taking this trade. Secondly, if the market breaks below this zone and afterwards, after taking this 100 pips, and if I'm successful, what I'll be doing, we can expect the market to go a bit below to make the fake breakout. And I told you, it's not always that the market makes the fake breakout. So what I'll be doing, I'll be waiting for the market from this point again to come up again to break the 1717 level, and after the retest, at this point I will be considering my bullish entry, because like I told you, we should be reactive, not predictive. So after this retest, if the market shows that it has now started to go towards in the upward direction, then I'll be expecting a target at least of 1740. So I'll be taking the second trade from 1720, I think, approximately. After the retest, that will be the entry which I'll get. I'll be going for 1740, which will be around 200 pips. So if you like the analysis and if you want me to upload on different pairs or different topics, do tell me in the comment section. Don't forget to like and subscribe, and I will also be posting the signals in case this trade gets a stop loss out, and after that we'll need to work accordingly. So I'll be posting the signals in my Telegram channel, which is completely free. So don't forget to subscribe and join my Telegram channel. The link is in the description.